Good morning, traders. It is Friday, October 21st. It's about 8:15 in the morning. I'm going to quickly run through the morning charts and give you a revamp of what's unfolded through the night and in pre-market today and what I see going forward. Now, starting with the US dollar index, here is the 4-hour chart. You can see we've zoomed back a couple months. And overall, what we see here is we saw these volatility rising, these spikes coming up. Eventually, we did see this support trend line broken. I really wanted to see a move, which still could happen, come up to the breakdown zone. So if we could see the US dollar index work its way up over time into here, we'd see lower equity and commodity prices, and eventually I'd be looking for a short play in the US dollar index. That being said, right where it's trading right now, it is forming somewhat of a base. We do have a pretty key resistance line. We've got a pretty good support line if I was to just draw it straight across from here. So it is forming a little bit of a base here. It's trading down at the lower end of its range today, so we'll have to see how that plays out. Overall, this impulse wave to the downside, I call it an impulse wave because it's broken two previous peaks. And the fact that it's done that is usually a sign that we're going to get some type of pause or pullback, but then it's going to continue in that direction. So right now we're starting to form this little base. Overall, I would like to see more of a correction from this dip low. I'd like to see it pull back somewhere up into the 78, 78.50 area, which would be 78 would be pretty good level actually to be shorting. So I'm hoping we're going to get a grind up in price in the US dollar index, which will put a little more pressure on stocks and commodities, but then we'll have a possible good opportunity to short the dollar and to go long stocks and commodities again if the US dollar continues to move lower. So that's kind of where we stand right now, but overall it looks as though we're forming a bearish pattern. Here we had nice impulse waves to the upside, and now it looks as though we've had an impulse wave to the downside, breaking some previous highs, and now more or less it's just forming a bear flag, just kind of hanging there, eating its time up, and eventually if it doesn't find any more strength, we're going to see it head lower, probably down to the 75.50, the 75 area, which is just a simple measured move. If you just take the estimate high there, the move down here, and you can just flip that to the downside, and that's where your target is. It's just a visual thing. You don't have to do it right on to the penny, but you can just see visually somewhere around the same. And of course, when the US dollar comes down to this level, we've got a pretty key support zone. We've got pivot lows here, pivot high there, pivot low there, which really triggered a big jump in price. So this here, the 75, will act as a pretty good support zone if we do see the US dollar continue to correct here. That being said, I am still looking at a stronger US dollar over the next few sessions, and I'm hoping that it'll pull crude oil down with it. This is the crude oil chart at 4 hours, and if we just zoom into the past couple trading sessions, we can see we had a nice drop there. This week we ended up taking a short position right up here, and literally it had a nice move in our favor within 24 hours. We locked in a 7+% gain on half of our position, moved our protective stop to break even just in case we do get a move back up. But overall, this move down, the futures contract didn't really have a whole lot of volume, but I'm not too concerned about that, simply because we are at a long-term resistance level here. And the drop that we had did break a previous pivot high, so we do have a good potential for an impulse wave to the downside. So I'm thinking we're going to get this little bit of a rebound today, and then hopefully we see it give way and actually start to pull back to the 82 to 80 level, which will act as a key support zone right through the middle of this noise here, where you have pivot highs, pivot lows. That'll carry over right into this zone. Now, looking at the chart of gold, this is the 4-hour chart of gold. We can see the past couple sessions, we've seen it. We've seen it start to fall out of its little bearish pattern here, which we have this kind of rising wedge. Rising wedges, in my opinion, are one of my favorite type of setups. Sometimes you do get a little bit of a hook to the upside, shakes everybody out of this wedge, and then you see it drop very sharply. We didn't see that in gold this time. Instead, it just started to kind of taper off and broke down, and is kind of trading lower with some kind of rising selling volume here. So we'll just see how that plays out. Overall, I'm neutral to bearish on gold. There is potential for gold and silver to still head quite a bit lower. If you just look at this pattern, and if I was to just squish it a little bit here, there is potential to see, we've seen this strong leg down, we've seen the pause, we could see another strong leg down, potentially to the 1450, 1440 area. And I'm not sure if we're going to get that in gold. We may get another good sell-off in silver if the equities market starts to sell off, because silver is way more speculative than gold is. Gold will have more support. But overall, I'm neutral to bearish on gold. I don't want to be shorting it simply because it is a safe haven, and just a couple headline pieces of news out of Europe or something, and we could see gold jump and spike in price. So I'm rather waiting for gold to work its way out, form a base, or put in some type of panic bottom, and that's when I'll be looking to take a long position, but I'm not looking to short precious metals. Silver chart, pretty much doing the same as gold. It to start to break down the past couple trading sessions, just from the low to the high. It's just kind of falling out of its little pennant that it's doing. Volume started to pick up. You can see here we've got some rising volume as it shakes traders out of this pattern, and everybody's kind of wondering what's going on. So right now it's just in limbo mode, just kind of working its way sideways until there's some catalyst to create some selling or some strong buying. Now taking a look at the bonds, here are the TLT 20-year Treasury bond ETF. More or less, it is also forming a little bit more of a bearish pattern. We've got a couple nice surges to new highs. We had a nice support trend line, more or less, that was broken, and right now it is forming this more or less bear flag or consolidation here, and I think it's a matter of time before we see possibly bonds actually drop out and we see the stock market put a bottom in. So what will happen is we'll see money move out of bonds and start to go into the stock market, and then we should see this ETF start to fall. And of course we'd be looking for an inverse fund, which is the TBT. Not looking to get into a trade yet on it. Really, TBT fund actually looks pretty good. It's formed a nice, more or less, kind of bottom here, a nice cup and handle pattern. There's potential for this to really have a serious launch up to the 26. I would think would be a fairly swift move in it, but there is potential for it to go all the way to the 28, possibly even 32 area. So there is good potential down the road for this trade. Now taking a look at the SP500 intraday chart, the past couple trading sessions, we have seen more or less we're trading right up at a key resistance level. If you just look at this previous price action, we're getting choppy. I pointed we could be getting a running correction here. Overall, we have got prices are still moving up overall in general, but it's a broad, more or less a broadening formation, and the volatility is getting larger. You can see what happens when you usually see that near market top or bottom. You can get a very big move gap in the opposite direction. So that's why I don't want to be in equities right now. We could literally see the equities market have a huge surge to the upside. We could see it have a huge surge to the downside, and it's more or less a gamble at this time. So that's why I went to crude oil. I don't think there's a whole lot of economic news that can really come out and really send crude oil rocketing through the roof. And since crude oil is at a key resistance zone, I think it's got quite a bit of buffer there to hold any good news down. And of course our stop loss for that is relatively tight compared to the potential gains on our short crude oil play. So that's kind of where we stand on the US dollar index this morning, on the SP500. This morning we're seeing futures trade up about 1% or so, 0.5%. We're trading up here right near the previous high, so we're going to see a gap at the top of the range. I wouldn't be surprised, because it's a gap up and we're in an overbought condition, that we actually see the market sell right back down to fill the gap. So if I just zoom in here, I'll give you a better idea. So this morning we're going to see, at this time, we're going to see the SP500 open somewhere up here. I wouldn't be surprised, because we're going to be at a key resistance zone, that we see sellers step in, spike the price down in the morning, at least fill this morning gap that we're going to have right in this area. Once that's filled, it's kind of going to be hit or miss. This is what I pointed out last Friday. It's going to be either there's a very good chance it's going to be a big rally into the close or a big sell-off into the close. And it's just a 50-50 guess right here. Don't really want to get involved on a Friday on anything new. You especially don't need to enter a new position to carry any risk through the weekend. So today is more or less sit back and relax, put your protective stop in place for your crude oil trade, and just let the market do whatever it's going to do. It's not much we can do other than we're going to analyze over the weekend, and I'll get back to you on kind of what unfolds today and how it kind of affects our outlook, or if it gives us a better outlook. Anyways, that's it for now. Actually, you know what? Sorry, I'm going to just show you the futures chart this morning of the SP500, just so you can see where it's trading. Yesterday, you can see it was a pretty choppy session. We had a sell-off in the morning, filled a gap, came back up, and pretty much flatlined throughout the night. This morning it's starting to pick up momentum, and it's trading up a little sharply this morning. We'll see how that plays into today's price action, but yesterday's closing price is right about here. So we've got this gap here to fill. I wouldn't be surprised again if we see selling come down, fill that gap, and then who knows what it'll do after that. We'll reanalyze the volume and the charts as the morning unfolds. Anyways, that's it for now, and I'll talk to you in a bit. Bye bye.